home prices are up 3 times higher than they were in 2001. They're up 202%. Is that realistic? We're going to look at those numbers today. We're also going to talk about how we are still seeing a very, very low number of home sales nationally and in the Phoenix area, and what factors are contributing to that. So thanks for joining me, you guys. Let's get into it. Let's talk about this average price per square foot. So per usual, the Cromford Report has put together some really interesting data that I wanted to share. And they're looking at the average price per square foot from 2001 to 2024. And they've compared this to two different lines, right? So we have the nominal dollars and $2001. And so what they're saying is that the dollar could buy a lot more in 2001. In fact, it was worth 79% more than the dollar in June of 2024 based on the CPI. And so what they decided to do was basically look at or chart out the dollar per square foot over time using nominal dollars, that's the green line, so the dollars that we're all familiar with, versus the blue line, which shows the average dollar per square foot, but expressed in 2001 dollars. They use the CPI to make an adjustment for each month between 2001 to 2024. So looking at that, back in 2001, our dollar per square foot was 99.04 cents across Greater Phoenix. Isn't that cute? Anything under $100 a square foot just seems unreal to think about, but that's what it was. And today, where we're sitting, that measure is $299.44 per square foot. So on the face of it, it looks like we've had a 202% increase in prices since 2001. Now, 2001 was a long time ago. I'm not saying it wasn't, and there's certainly some time for price appreciation, but 202% seems like quite a lot. So when they start to chart these two and see the differences between them, you actually, if you're looking at the 2001 dollars, the increase from 2001 to where we're at today is a 69% increase in real terms. So that's a lot more palatable than 202% if you're really factoring in the CPI over time. Now, they also made a few different conclusions on this, that home prices in real terms were below January 2001 levels throughout the period of September of 2008, so around here, all the way through April of 2015 through here. And so they're saying during that time, that was 7 years where you could get a bargain. They also said that home prices in real terms are still significantly lower today than at the peak of May of 2022. So on both of these charts, you can see where that peak was in May of 2022 and where we're at today. After that correction, even though we've seen some price appreciation since then, we still haven't reached back to that peak of May of 2022. Now, home prices in real terms are similar to those at the late stages of the bubble in the first half of 2006. So you can kind of see this comparison from there all the way over to here. We're seeing similar home prices to that point in time. Home prices in real terms are similar to those at the end of 2021 as well. So I know a lot of people say, I can't wait till it gets back to 2019 prices or 2020 prices. Well, our prices are about 2021 prices right now. So we'll see if it gets all the way back to 2020 or even 2019. And then they also recognize how short these boom periods were in duration. So we had between 2004 to 2006 was that boom period then. And then our boom period between 2020 and up to 2022 was the second boom period. We had one bust and TBD on where we're at today. I know many of you will expect a bust. Some of you think there won't be, but this graph ends here for now. So we'll have to stay tuned for what continues beyond here. Now, there is this really awesome chart that they've put together that I wanted to share related to prices, because I think this really puts in perspective what we've seen as far as price growth over time. So this is the national median sales price. This is not for Phoenix, but they're looking at the national median sales price versus a 4% growth rate from 2001 to where we stand today. So they took the average amount of appreciation and modeled that out over time from 2001 to today. And if we just had a very smooth ride in home prices from then until now, we'd be at 418,509 for the median sales price. What we have done instead is we've had a boom, a bust, we've come back up, had some corrections along the way, and today we're standing at $420,800. Now, again, this is nationally, but I think it's really powerful to see, although home prices can feel really high, especially when you look at where we were at, here in 2019 to where we are there. Of course, that feels like a really big jump, but we were still coming out of this bust time frame and kind of getting back on track. Now, they also looked at Phoenix specifically, and this looks a little bit different. So they did a 5% growth rate because that's a little bit more typical for our market here. And they also looked at homes under 2,500 square feet. I believe the reason they did that was to really take out those luxury homes that are going to obviously have a higher home price. And they're really just trying to look at the bulk of the sales in the Phoenix area. So if we look at this with a 5% annual appreciation rate, we should be at $399,298 for a median sales price. Where we're at today, $430,000. So are we overpriced? Yeah. But are we significantly overpriced? No. I know a lot of people say we're 50% overpriced or 25% overpriced. And I know it can feel that way again, like looking from where we were at in 2019 to where we're at today, it feels like a very quick jump. But if you really chart out where we started to where we should be today, we're not too far off. And you've got to see our crazy journey along the way. Obviously, we've not traveled in a smooth straight line whatsoever, and where we're at today is certainly higher than where we should be if we did our average, but it's not as high as maybe you would have thought. And I'm curious to know if you think this is, enlightening, or if you would have anticipated a higher number. Drop it in the comments. I want to know what you guys think. So let's move on to talk about what's going on in the economy this week. The Fed is meeting, so it is a big week. And why do we care about any of this? Because everything that takes place there can affect your mortgage rate. And so if you're a home buyer out there, you want to pay attention to this stuff. So the Fed's going to meet on Wednesday. Everyone is anticipating that they are going to keep the federal funds rate the same this month. And then in September, they may do a rate cut. Recent updates in the economy have investors eyeing when the Fed's first cut will come through. The PCE in June rose 2.6% over the prior year, which is the lowest annual increase in more than 3 years. So that was good news. We also saw significant decreases in the CPI. Labor market is showing signs of cooling. So the ratio of job openings to unemployed workers is back at pre-pandemic levels as of last month. So all of this is good news for inflation, which is good news for mortgage rates. This has prompted markets to price in the Fed's first cut in September. And so we're really going to have to see what Jerome Powell says on Wednesday, but that's what the anticipation is, that we are headed in the right direction and they may be able to cut rates come September. They're also looking at the labor market. So Friday is going to bring a fresh look at monthly job additions. And we're also going to see the July jobs report, expected to show 175,000 non-farm payroll jobs added to the economy, and unemployment holding steady at 4.1%. All of this, again, it only matters because when these reports come out as anticipated, it keeps everything in the market, including mortgage rates, stable. If it is good news that, that fight for inflation, against inflation is going well and we're bringing down inflation, markets react favorably and mortgage rates come down. So where are we at with mortgage rates? We're sitting at about 6.8%. According to Mortgage News Daily. Of course, all of this fluctuates on, in terms of your qualifications, but for a 30-year fixed rate, generally, this is where we're at. What is really cool to see, I think, is where we started at the beginning of this month. So that's July 1st, we're at 7.14%. And where we're at today is quite a bit lower. So we've seen some meaningful, moves in mortgage rates. And I can even say, in my experience as a listing agent the last 2 weeks, as we've seen rates start to really come down steadily, I've seen more activity on my listings. I've seen more buyers willing to buy, and actually got a couple of my listings under contract, which may not otherwise would have happened without rates easing a little bit to get some more buyers out there. I was just talking with an agent on Friday who's been seeing the same thing on her listings. So this has been moving the market a little bit more, but not enough to see a normal number of home sales. We are still in this like pit of a very low home sales. So existing home sales continue to slide in Arizona and nationwide. This is talking about, numbers we've talked about on this channel before. Home sales slipped 5.4% to an annualized 3.89 million, the lowest level since December of 2023. It's the fourth straight drop amid high mortgage rates and low affordability. And so this is undermining home demand. At the same time, the median sales price jumped to a record high of $426,900 nationwide. This is according to the National Association of Realtors. And it's the second straight month it reached an all-time high and the 12th consecutive month of year-over-year price gains. So what is happening is the number of home sales is low. There's low transaction volume, but there are still very hot areas of the market, in particular, like the East Coast. I talked to a lot of agents on the East Coast who say that homes are flying off the shelf and they're in bidding wars all the time. I was just speaking with someone who knows someone buying in Boston, and they had to do a cash offer quickly because they weren't going to be able to get under contract without being that competitive and offer a lease back and all of these things. So that type of stuff is still happening in other areas around the country. So these are the markets with the biggest year-over-year increase in new listings. So that's the other thing that's taking place, is we are seeing more inventory in some areas, less demand. So those markets are slower. And Phoenix is one of those. So in June of 2024, we've seen 7,942 new listings. Last year, it was 6,354. So we have a 25% year-over-year increase in new listings. So let's look at these numbers from the Cromford Report. Sales per year. You can see it is a very sad state of affairs when we look at the sales per year. Sitting at about 70,000 last year around this time, we were about 74,000. So very low. If we go, I clicked on all of these years just to go back and see when we saw the last time we were around these numbers, and I had to go back to 2009, and we surpassed where we're at today in 2009 once we got to about May. So until then, we were similar and lower than we are today, but then the tides changed. So sales per year, I don't know if this is going to pick up. And we'll see how things change with the effects of the new rules from the National Association of Realtors, which take place here in Arizona this week. All of the fields in the MLS that are talking about agent commissions go away. So all of those things that were previously negotiated will have to be living on a website off of the MLS, and anything that is offered in the future for buyer agent compensation has to live off of the MLS. So all of that changes this week. So we'll see if that has any effect on anything. For active listings, we've been seeing a climb through this year, but it seems like we've kind of leveled off. And from what I've heard from the Cromford Report, they anticipate this to stay level and then probably decline a little bit in the fall, maybe peak a bit and then go back down. So I don't know. We'll have to see what happens with new listings, but they certainly aren't climbing any longer. They seem to be kind of holding steady. So more to come on that. Now, I thought this was interesting. Real estate market is broken for everyone except the ultra rich. And I know a lot of people find it hard to believe that people are buying with cash, but they are. And this is one of the reasons the real estate market has continued to move, because there are people out there that are not sensitive to mortgage rates, because they'll just pay in cash now and then put a loan on the house maybe in the future when rates are lower. And they have the flexibility to do that. So This is an article kind of talking about that. They're saying that the lone bright spot in the market is luxury, with homes over $1 million, the only price category to see sales rise in June. Now, this is nationally, not specific to Phoenix, and I would bet that in the Phoenix area, we've not seen the same trend, simply because luxury kind of disappears over the summer, because those who own luxury homes don't want to live here in the summer, and I don't blame them. So they go elsewhere, and then they'll return to their real estate affairs in the fall when they're back. With the 30-year fixed mortgage rate hovering around 6.8% after sitting around 3% from the late 2019 to 2022, anyone who has to borrow is paying a significantly steeper price for the same house as they would have just a couple years ago. Deep-pocketed buyers don't have that concern. They can use cash. And this is funny. I can't remember the last time I heard a buyer talk about financing. That's from an agent who's based in Sarasota, Florida, who does a lot of luxury real estate. That is happening in these luxury markets. The result is high-end real estate boom that's sending the stock market's biggest U.S. luxury home builder to new heights. Toll Brothers has posted stronger than expected orders in its fiscal second quarter, etc. So that part of the market is still moving, and I think it's pretty interesting and will be interesting to see as we approach the election, because that's also one segment of the market that pauses a little bit more significantly than other parts of the market, mainly because those homeowners and home buyers have a lot of money invested in the stock market and may want to see the outcome of the election before they decide what they're going to do with their money. So just thought that was interesting. You know, as much as rates, we talk about rates and how this is affecting home buyers, it is certainly not affecting a portion of home buyers, primarily that luxury buyer. So let's talk about the Cromford Market Index. And by the way, if any of this is helpful to you, please consider subscribing to join us every single Tuesday, and share this with someone who might find it valuable. So the CMI, this is the Cromford Reports index, basically, that helps us see supply and demand in the market. We're finally at 74 and 74 on supply and demand, meaning we're in a balanced market across the major Phoenix area. As we know, every single city can be a little bit different. And at first glance, this looks pretty ugly. We have a lot of red arrows, meaning that month over month, those cities saw a decrease in their CMI, which means that they lost the advantage for the seller and moved more towards a buyer's market. Now, I will note anything over 110 is a seller's market. So again, still a lot of cities in this seller's market, technically, all the way down to Gilbert and Tempe. I'll give it to Tempe too, although they saw a 22% decrease in that month over month. But then Peoria and Paradise Valley are balanced markets. Everything else is in a buyer's market, technically. Maricopa moved upward by 3% month over month. But when we look at the big changes, all these red arrows, you'll notice there's a lot that were like really small month over month changes, like 1%, 2%. 4%, 3%, 1%, 2%. So even though we are seeing a lot of red arrows on this, some of those are just very slight changes. And when we look at the comparison overall, with all of these cities, the month over month change was only 5.4%, negative 5.4%, which is smaller than last week. It was negative 6.7%. So that rate of decline has changed directions, and it's actually more of a positive for the market. We didn't see as much deterioration in the market. So don't be misled by all of these red arrows. We actually kind of had a stronger week than we did last week. Now, I've been sharing the contract ratio as well, because this is another similar metric that shows us the health of the market. And this is going to show seasonality, and it also moves a little bit faster than the CMI does. But where we stand today for this, and it compares the number of listings on the market that are available for sale to the number of listings that are under contract. Today, across the Phoenix metro area, we're sitting at a contract ratio of 42, which means we're in a warm and balanced market. We're at week 29 of the year. And so if we go back to week 29 of last year, our contract ratio was actually 72. So we were quite a bit warmer last year, getting into like more of a warm market. And then week 29 of the previous year, we were at 49.8. So over the last 2 years, we're still lower today than we've seen over the last couple of years. And I'm usually showing the map, but I just wanted to show you guys how this looks. You can see the seasonal changes every year, and then see kind of where we sit today as compared to previous summers on this contract ratio. And then here's our heat map. So a lot of green, some blue, a little bit of yellow, and very few red. As you can see on the left-hand side, it is a true heat map. So those lighter colors, the green, the blue, this kicked us all the way back to June 8th. So you can see how much warmer actually it was at the beginning of June, and then where we're at today. Much more green, blue, those are the cooler colors. Yellow getting warmer, red, obviously, red and orange are a little bit hotter. Now, if you want to know exactly what the contract ratio is in your zip code, check the description below. I have a link to request that information, or you can just get a market snapshot of what's happening in your zip code. So check the description for that information. I'll be back next week with another market update. Thanks for joining me, and I hope all of this was valuable for you.